Hello, welcome to this broadcast by Brexit Watch. I'm your host, Jonathan Saxton. Today we are delighted to welcome Barnabas Reynolds to Brexit Watch. Barnabas Reynolds is a partner at Shearman Sterling and a noted Brexiteer who has written extensively on Brexit, especially with regards to the financial services sector. Barnabas Reynolds, welcome to Brexit Watch.
Thank you very much.
Now,
pleasure to be here.
Let's get straight into the discussion, Barney. Obviously, we are all have all been impacted so much by the coronavirus and lockdown. You only have to take a look at my hair to see the consequences, the real life consequences of it. What has been your assessment so far of the government's strategy and its handling of the crisis, especially on the economic side, relative to other Western nations?
Well, the government's keeping everything going and obviously now starting to open things up again. My suspicion is an awful lot of the economy will have been successfully preserved after this. So I think that's been a very positive thing to do. Obviously, it's expensive. Obviously, it builds up debt, which now needs gradually to be paid down. But I'm confident we can do that. So generally, I think the government's doing all the right things.
What about the your assessment of the Chancellors' policies, the Treasury's policies, the furlough scheme? Have you got any thoughts on that, again, compared to other Western countries?
Well, again, it's generous, but I think, again, it's sensible. I think the UK is in a reasonably good position given what's happened. Obviously, this is going to turn out to have been really quite an episode in our history and very expensive. But I think they've taken very bold and proactive steps to keep things going as much as possible. And I think that was the right thing to do. Now,
in terms of the, you briefly touched on the consequences. What do you see as firstly, some of the domestic consequences in the short to medium term of the crisis and lockdown?
Well, I think so. Lots of companies are really up to the gunnels with debt and may not be able to take on much more. I know the city and the government are looking at ways to facilitate other ways of putting in money to companies, for instance, through preferred equity. But I think that's going to be an issue to be grappled with in order to try and keep companies going, which have just been hit by COVID, but are basically viable companies. And I think that's going to take quite a lot of work over the next few months. But I'm pretty confident that it can be done. And I think, otherwise, I would hope that we have a policy of not ratcheting up taxes too much and not dampening the economy, but in fact allowing it to really fire up again and to try and build ourselves out of the situation by growing the economy rather than purely, well not purely, but predominantly paying down this debt through taxes in the short term.
Now, obviously, leisure and hospitality has been an extremely hard-hit sector. Still very much closed up, at least until early July, so we're told. We're also coming into the travel and tourism. The travel and tourism industry has obviously been hit hard. We're coming into the summer tourism sort of moment, the key season for summer tourism. Now, we have heard that in Southern Europe, they're trying to open things up, in Europe generally, but borders are closed around the world. What are your thoughts about what the government could do to help these sectors, aviation too? And do you think something could be done on the 2-meter rule?
Well, I mean, this is beyond my remit as a financial services lawyer. I mean, I think the government is doing the right things in terms of trying to liaise with governments elsewhere and work out where the statistical chances of anyone getting reinfected or infected are low, and facilitating holidays to those places. And they are also looking at the 2-meter rule. Obviously, reducing the 2-meter rule to 1 meter increases the risk. And is it a tolerable risk or not? My suspicion is that it is a tolerable risk. But I know they are looking at that. I would anticipate that analysis being concluded quite quickly.
Now, thinking more internationally, there's been a lot of talk about a sort of reset between China and the Western world. There have been calls for potentially reshoring or onshoring critical industry. And there's been a sense, I think, quite widely shared, the Western world has been quite dependent on China for its manufacturing. Do you see an opportunity there, and do you think there could be a reset economically and geopolitically between China and the West?
Well, I mean, if you mean will the Communist Party in China change its approach, I'm not. It doesn't look like it's willing to do that. I mean, clearly there is going to be a re-examination of supply chains, the use perhaps of supply chains elsewhere in other destinations that are also cost effective, but aren't subject to this sort of the same level of geopolitical risk. I mean, you know, I think unfortunately there is probably going to be a period ahead of us where there are, you know, free trade nations, which I would say are predominantly the common law nations, the Commonwealth, the US, actually Japan I would include in that. And then I think there are going to be those who pursue really quite an aggressive mercantilist path, and China may unfortunately be in that latter category. The EU, in fact, may be in the latter category. It remains to be seen. But that is the direction of rhetoric at the moment.
Barney, you mentioned the EU, so let's talk things Brexit. Right now, the EU and the UK are in this transition period. This is due to end at the end of 2020. During this period, the UK remains in the single market and customs union. It pays into the EU, but it no longer has MEPs. It's kind of taxation without representation, albeit for a short period of time. So what has been your assessment of how the negotiations have gone, and have you been encouraged or discouraged by the government in its handling of the negotiations, especially with regards to the assessment that there will be and the statements that there will be no extension to the transition period?
I think the government is doing the right thing in the sense that this is a question of political will, principally on the EU side. So the government has said, and in fact Theresa May's government ended up saying, you know, that we wanted a sort of free trade CETA plus type deal with the EU. The Theresa May government had a more complicated version of that for goods, as we all know. But the Johnson government has said clearly throughout, we'd like a CETA plus arrangement. And I believe from all the reports, the EU have said, yes, that's fine. We're happy to work towards that. The withdrawal agreement provides that both parties are to use best endeavours in good faith to agree that sort of setup, as set out on the terms of the political declaration, which envisages exactly what I say, by the end of this year. And that was a timetable that is, or it is a timetable that's contained in the withdrawal agreement. So what the UK has now done is say, okay, well, here are some clauses that the EU has agreed to before across the various areas of trade, and we would like a stapled together version basically of that, with minor changes for discussion and so on. So the actual lift in conceptually and in terms of legal drafting to arrive at the final deal is not that significant at all. It could be done very, very quickly if you lock the lawyers in the room and get on with it. The political position is quite divergent, unfortunately, but it will either converge or not. And I don't myself see that any extra time is likely to mean that convergence is more likely, or that you'll get a better convergence. So the UK, having withdrawn from the EU, wants its sovereignty back, which basically means that it can make any laws and regulations it wants within the UK's domain. Obviously, under a trade agreement, there are certain restrictions on that that are agreed to, but they are pretty well trodden internationally, and the UK has put forward versions of that which reflect international practice. It's the EU that's saying, oh, well, actually, I know we said this, but in fact, there are some other things we want. And dressed up in terms, quite ingeniously perhaps, in terms of high-level concepts, we effectively have, through the sort of concept of the level playing field, for instance, a proposition which is unique in trade practice globally, of saying that if you want to trade with us, you actually have to be subjected to our rules or apply our rules. Now, it looks like the EU's backed off that a little, concept a little bit, but they still seem to want to try and staple the UK rules and laws across a whole host of areas, most importantly, perhaps state aid, which is an anti-subsidisation regime of the EU's, to an internal approach of the EU, which doesn't really work for the UK. So, I mean, this diversion, this sort of completely different way of thinking, in the EU's case, it's inconsistent with Article 4 of the Political Declaration, which makes quite clear it recognises UK sovereignty in the UK's internal market. It will either converge because the EU will accept that we will be actually delivering on a CETA plus arm's length free trade deal, or it won't. And it would be very unfortunate if it doesn't. I'm optimistic that it will do, but I don't think there's much point in spending 2 further years talking about exactly the same point. The actual execution on the deal, once these that threshold concept of UK sovereignty is genuinely accepted, not just in the terms of the withdrawal agreement and the political declaration, but is genuinely in hearts and minds terms accepted in the EU, then a deal can be done very, very quickly indeed, and I think it can be done by year end.
Barney, assuming the June deadline does indeed come and go, do you think that will focus minds in Brussels as we move forward to December?
Well, yes. I mean, I don't think the UK government is going to budge from the default position, which is not a negotiating position, it's just a statement of fact, which is having left the EU, the UK is sovereign. And with that concept, a number of things follow, including the UK can't follow EU rules, it can't sign up to the ECJ, it can't, in fact, the Northern Ireland Protocol is inconsistent with that and needs replacing. So there are a whole host of things, whether they were try-ons or whether they were, otherwise, I don't know. But a whole host of propositions from the EU are just incompatible with that. I don't see how the UK government can, and it shouldn't, move from that basic premise of international law, which is state sovereignty. As time passes, the EU clearly will see that the UK is not shifting from that. Now, and that will up the pace to a degree, but will there be that leap over the threshold, as it were, where the EU becomes suddenly willing to do a deal with a sovereign neighbour, a normal trade deal, or not? And that last bit of it is a little bit unpredictable, because one can take a horse to water, as it were, but all the omens are good. It's agreed in the political declaration that the EU recognises UK sovereignty in Article 4, and the UK's internal market, which is incompatible with the Northern Ireland Protocol, shows by that need replacing. So all the omens are good, and there are lots of statements that have come out of the EU recognising EU sovereignty. But now we just need to see the meat on that, and it's really for the EU to decide whether it is prepared to follow through.
Now, right now, the UK is entering into trade negotiations with several countries. We know that they've been entering into trade negotiations with the United States, led by Liz Truss on the UK side, Robert Lighthizer on the US side. Very recently, trade negotiations, we heard, were beginning with Japan, and very, very recently, we heard trade negotiations beginning with fellow Commonwealth realms, Australia and New Zealand. What are your thoughts about these? How important are they going forward?
Well, I think they're very important. I mean, as an initial observation, I don't believe, and time will tell, that any of those countries are going to come up with propositions anything like what we've been hearing from the EU. And in fact, it's important that we have a sort of lattice work of trade deals which are all mutually compatible, so that we can agree things with different people facing in different directions, and sit in the middle in a way of that lattice work or spider's web or whatever of trade deals, and get the benefits for the citizens here of all of those. And so it's important we don't agree to things with any one country that would prevent us doing anything with the others. I mean, the US trade deal is obviously extremely interesting because the US market is huge economically and very competitive. And so we can buy from the US, you know, pretty much anything. So in relation to our consumer prices on the high street and so on, a trade deal with the US, which removes barriers and tariffs and so on, would be hugely beneficial for consumers here. And it would also mean that anyone who didn't do a trade deal with us, for instance, the EU, would have to compete in our market, paying tariffs against international prices that we're getting from the US. So it'd be a very, I think the upside from a US trade deal is much higher than is often currently written up. And it would be a very nice thing to have, but obviously, like any other deal, not at any price. And we need to get accustomed to the idea of if we're striking these deals, that there are good deals and less good deals, and we need to be able to pick between the two. And obviously, if the terms of the US deal aren't attractive, then it's not worth having. My suspicion is that the US is very like-minded in terms of trade, and on most topics, and that it's possible to do a good deal. Australia would be great. I mean, the other, you know, all these other countries would be great as well, Japan, and so on.
Barney, you mentioned in terms of the US, you know, the terms being important. Do you think there's any validity to the concerns about agricultural products coming from the US? Or do you think that's unfounded?
I mean, that's a scientific question. There's an animal welfare issue wrapped into it. You know, I mean, one solution to so clearly politically in the US, it's likely, never say never, it's not certain, but it's likely that the US minds a lot about, perhaps disproportionately about agricultural sales. And that some of those voting on the trade deal in Congress, you know, are going to be representing states and constituencies which, you know, for which they need to be seen to deliver something on that. One way through may be labelling, where those products are taken into the UK market and labelled as to where they come from. I think the UK has suggested that in relation to some there'd be tariffs, which would true up the prices to be more comparable to local prices, so there's fair competition. I mean, these are all ways of addressing it. To say we're not going to accept anything at all, I think may turn out to mean that that sort of deal then is less available, or not particularly available on attractive terms. We'll have to see. I don't know. I'm sure Liz Truss is doing her absolute utmost to find the best way through this. And, you know, I do believe the government's doing all the right things. But there will be some decision points to be made, and they will need to be discussed nationally when it's clear what those decision points are. It's sort of early days yet, so laying down markers saying, well, I'll never agree to this, I'll never do that. I mean, there's a limit to which one should do that, in my view, because we need to be turning up at those meetings with an open mind. If there is a scientific reason for not doing something, then that's, I'm sure, something that could be explained and justified. But if there's no scientific reason, it's a question of taste, you know, in terms of, well, my method's better than your method, but both are equally safe, both are, you know, defensible, then I think we need to be prepared to have a discussion.
Barney, there will be people listening to our conversation who would say, look, the UK could never compensate from losing, from walking away from this 450 million strong bloc right on its doorstep. It could never compensate for that with a trade deal with the US even, or with Commonwealth countries or Japan. What do you say to that? And is a so-called WTO Brexit something to be feared?
So, I mean, obviously there's a big difference between imports and exports. So if you're focusing on consumer prices, the livelihoods of everyone living here, the cost of living, then a trade deal with the US is extremely valuable because it would take a lot of our prices down to world prices and give people here more discretionary spend. If you're looking at exports, then clearly the EU market it is large and very large and on our doorstep. And it would be great to have a win-win trade deal with the EU. But in my view, and people's judgment calls vary on this clearly because we're debating it and have been for several years now. In my view, not at any price. I think the sovereignty issue matters hugely, and iteratively, the sorts of arrangements being proposed would subsume the UK into something where I think it would be a very fragile arrangement, and people would be very dissatisfied with it. I think it's important to get things right, and I think it's important to stand behind, to insist on sovereignty in any framework. Is it possible for the UK exporters to thrive without a deal with the EU? I mean, obviously that varies by sector, and I don't think, well, I'm not suggesting at all that we don't want a trade deal with the EU by preference. We absolutely clearly do, but there are, it seems to me, I believe, hard limits on the basis on which that deal is struck.
And presumably, Barney, with the coronavirus crisis, there has been so much disruption anyway. Any disruption that could occur potentially would be minimized now because of the crisis.
It's reduced, perhaps. I mean, the coronavirus also, I think, it's a very unwanted situation, but I think it accelerates EU thinking in a way that nothing else has done or would have done that can be conceived of, in the sense that so in the EU you've got three sort of basic tenets, with two of which are at odds with the third. You've got the EU being a bloc for trading purposes. You've got the eurozone being a bloc for monetary purposes, and you've got member states operating individually for fiscal purposes. Now, the latter two propositions, at the very least, are incompatible with each other in terms of the pure legal architecture of how the world's financial regulations and so on fit together. And what this means is that the eurozone, under EU law, has been effectively running its financial market in a way that creates huge financial risk for the rest of the world, including the UK. And northern eurozone countries have been effectively dumping lower priced products on the UK and US and other markets around the world. If I could explain that. Essentially, what's happened is that EU law is treating member state debt as sovereign, which is inconsistent with the international Basel rules. Sovereign debt is the foundation stone for the financial markets because it's assumed, I think validly, to be risk-free if it's in the same currency, if it's in the currency of issue of the sovereign itself. So the sterling debt issued by the UK government, US dollar debt issued by the US government, is of a different order in terms of risk than any other asset, in a way, because the UK government and the US government need never go bust because they can always ask their central bank to print more money to avoid defaulting on their debts. So it's really like cash. EU law is not acknowledging that the fact that member states of the eurozone don't have the ability to print more money at whim to repay their debts, and so they're reliant solely on their taxpayer base and hoped for collaboration and cooperation with other eurozone states if anything goes wrong through the ECB, and we can see in the press what the limits are to that cooperation. And so that debt is more like US municipal debt and is highly risky. That fact is not acknowledged in EU law, and instead it is baked into EU law in a huge number of ways, which in fact I've analysed with a couple of others and published a book in February on. Across the whole of the EU law architecture, it's assumed that that debt is risk-free when in fact we know it isn't. What does that mean? That means that the EU financial system is not capturing that vast amount of risk. That risk doesn't just stay still. Those financial institutions in the EU are doing deals with people all around the world and offloading some of that risk through derivatives contracts and other interactions, directly and indirectly, which neutralize the risk into the global markets and start affecting the savings and investments of savers and investors. So, and in the UK, we mitigate it on behalf of ourselves and the global market we host as one of the two financial centres by imposing top-up capital requirements. So we're taking on a cost effect, in effect, that is not borne by EU financial institutions, but anyone here has to bear in order to cater for that risk. There are three sort of clear trade results of this, which are heightened by COVID, coming back to your question, which I think are bringing the EU's thinking, or concertinaing down the EU's thinking from what would have been 20 or 30 years hence into the here and now. What's happened through this setup is that Northern Eurozone producers, exporters, are benefiting from a structurally low currency value because the currency is pulled down by massive debt in Southern Europe and the possibility of default of Southern European, Eurozone countries. And that is because the Northern Eurozone countries are not accepting liability for Southern Eurozone debt. So that debt sits there and means that the moment in time when there could be a default of Eurozone debt is brought forward massively because you have to look on an individual state basis. The second point is that there is unlimited, because of the setup of the Eurozone through what's called the Target 2 system, there is unlimited financing being provided to Eurozone vendors or producers because Target 2 provides effectively unlimited funding to their Eurozone-based buyers. It's always constant. If a Greek company wants to buy 10 German cars, it can borrow from its Greek bank, which will borrow from the Greek central bank. The monies will be deposited or given to the German seller and deposited at the Bundesbank and up at the, ultimately into the ECB in both sides. But there's never any reconciliation across the top. So there's effectively just a piling up of debt, in this case with Greece, which provides a huge financing facility for the Eurozone sellers. The third point is that the phenomenon I mentioned about Eurozone risk not being catered for in the EU banking system, apart from the UK, but we're out now, means that those banks are operating more cheaply with the lower overhead than they would do if they had to comply with global Basel standards, which basically means they can lend more efficiently and cheaply than otherwise. Now, all of these 3 points, and it's quite technical, but if I can now pull it all together, all of these 3 points effectively mean that Northern Eurozone exporters are dumping low price products on UK and US markets and elsewhere around the world, outside the Eurozone. Secondly, it means that they're subsidized, and not just in Northern Eurozone, but all Eurozone producers are subsidized by Target 2 in the way that I mentioned. And they're subsidized by cheaper financing than would otherwise be possible through the EU banking system. Each of those effects are actionable through self-help remedies under WTO law, through the ability for the UK, US and others to charge anti-dumping tariffs and countervailing duties for subsidization to basically true up the prices of those Eurozone products to what they should be were they to have not done any of these things. And so you then look at what the price is of a car from a third market like Japan, and you say, well, the cars that we're buying are cheaper than they would have been if you look at how they are priced in Japan from Japanese sellers directly from Tokyo or whatever. We should charge a tariff to true ourselves up. That is a huge point because it goes to the heart of an awful lot of the discussion. And in fact, is why I think a deal is likely this year. Before COVID struck, the numbers involved, these points, and I've been writing about them, are there I don't think necessarily fully understood, but they're there. But in a way, the can could be kicked down the road, and people can ignore them. What COVID does means that the Southern European debt levels are just spiraling up, and it exacerbates the three effects that I've just mentioned, which where the Northern Eurozone countries in particular, but other Eurozone ones as well, are benefiting disproportionately. In a way, they have a fantastic deal at the expense of the UK consumer and the US consumer and so on. And it brings forward that point in time, the opposing point in time where that needs to be dealt with, because the Northern Eurozone countries are now being asked by the South, for further reasons because of the levels of debt, to neutralise that debt. Now that would solve it. If the Northern Eurozone took on mutual joint and several liability for Southern Eurozone debt, then the Eurozone would become effectively a unit, a country, where monetary arrangements and fiscal arrangements were unified. The Basel rules would be satisfied. The debt raised by the Eurozone countries, because all the other ones were taking responsibility for it, would be risk-free. And you would have the three effects I mentioned for trading, the dislocations would disappear in law. Because generally, for a state engaged in currency manipulation or whatever, every state's allowed to manage its interest rate policies and internal affairs like that. So the point would go away if that were to happen. I don't think it is going to happen. It's clear from the discussions within the Eurozone, there isn't a willingness to neutralise the debt. But what COVID has done is bring forward that moment where that decision point to right now. We're going to see it in the next few months as to whether or not there is a willingness to do that. I don't think there is. The other possibility is to reverse out the Eurozone's architecture completely. I don't think there's any appetite to do that in the short term. The third, in fact, pushes the Eurozone to do a trade deal with the UK, because we are the ones that mitigate this Eurozone risk on behalf of the Eurozone in London at the moment, through our top-up capital requirements here, through allowing the Eurozone and EU financial institutions to trade in the UK market on the back of these rules, which we know to be in breach of international standards. We mitigate the risk that arises. And so, the deal on the table from the UK is that we will allow that to carry on in financial services. And it's a very simple way of doing it, and it's through something called enhanced equivalence, which I've drafted and set out the drafting for, the wording for in treaty text and regulation, that gets us to where I think is a fair outcome. It also then brings forward the moment in time on the trade dumping and subsidization, which is so unfair that I've explained, because when the EU talks to the UK about a level playing field, it's a complete intellectual misdirection in my view, because the UK, there's no evidence at all that the UK is intending to compete unfairly or improperly on social standards or anything else. Within the EU, no member state is fettered on what it does in terms of tax policy, because that's outside the EU architecture. And yet the EU is saying to the UK, you've got to agree not to do anything on these features. I think it's a misdirection intellectually, because in reality, there's phenomenal trade dumping and subsidization going on an unlevel playing field due to the Eurozone's legal architecture that I've explained, with those three facets or features of dumping and subsidization, which I think should prick that balloon or burst that balloon or show that this whole discussion about a level playing field is absurd, because it's actually the UK that is suffering from an unlevel playing field. And in fact, we need to do something about this Eurozone dumping. We can, in the financial markets, continue to manage or mitigate Eurozone risk through an enhanced equivalence deal. We need to consider what to do about trade dumping from Eurozone producers and subsidization in terms of raising tariffs or duties to protect the UK consumer. And that does need to be talked about in the context of a level playing field. But the other stuff that the EU is raising a level playing field is absurd, and it's not in conformity with international practice or anything else. The final point on this is it also pricks the balloon of the Northern Ireland Protocol, because the Northern Ireland Protocol, by and it was intended only to be a sort of a hopping off point, you know, a hop to the final destination to the end of the year, where we end up after good faith and best endeavours negotiations with a free trade arrangement and a sovereign recognition of UK sovereignty and so on. So I don't think the UK ever thought it would end up permanently in the Northern Ireland Protocol. It's not a backstop, unlike the Theresa May thing. It's just a conceptual sort of Cartesian thing of what if we all use good faith and best endeavours and we end up at year end not having a deal. I mean, it's quite clear that's not happening, and the whole thing I think would fall apart if it's the case that best endeavours and good faith haven't been used, then it will all fall away. But the Northern Ireland Protocol, by seeking to apply, if in that universe of situation, which I don't think would ever arise, but it would seek to apply EU law in Northern Ireland for goods and agri-products and EU state aid law to the whole UK in relation to the north-south border. Those points, in particular the state aid provisions, would prevent the UK protecting the Northern Ireland the consumer and Northern Ireland businesses from the trade dumping and subsidisation that I've mentioned, which is not in conformity with the UK's undertaking to recognise the UK's internal market and ability to compete and protect itself and so on. So that falls away for exactly the same reasons. So going back to and it's a detailed answer, but I hope helpful, going back to the COVID point, what COVID does by increasing the strain on the southern eurozone countries on their debt levels is to bring forward a moment in time which was inevitable but would have come a long time hence to now, where the northern eurozone needs to decide, are we going to make a sort of state out of the eurozone and legitimize in a way this whole arrangement legally internationally, or are we going to kick the can down the road? I think it's going to be the second, and I don't think there is appetite. I don't think the politics are such that the people in the northern eurozone have had it explained to them what the end result is and what the consequences are. I don't think they've voted for it. I don't think they've bought into it. I think it's going to be the kick the can down the road. If it's the kick the can down the road solution, then the only trade relationship that keeps the show on the road with the UK is the sort of relationship that we are envisaging and proposing. So to that extent, it's a mutually beneficial situation in the sense that, despite all the awfulness of COVID, it forces everyone to confront the reality that the world is going to have to shift around in this corner of the world. You know, things are going to have to shift around, and we're going to have to recut arrangements, and people are going to have to make some choices. The UK is making a very reasonable and fair ask, which the EU has already in principle agreed to. I think for all the reasons to do with COVID, they will follow through.
Barney, thank you for that very detailed answer. You preempted a few of my questions, actually, so you've done my job for me in a way. With the limited time we have left, I want to focus on the EU and Eurozone, but just before I do that, one question about financial services. You spoke about financial services. Presumably, the way you see it from your standpoint, there is no risk of London losing market share to Frankfurt and Paris.
Well, I mean, there'll be if there's no deal at all, things will shift around to some degree, and you know, I've analysed this, but there will be some changes. But you know, the EU passport regime, which is the underpinning of the current setup of the city, has only really fully been in operation since 2007. Before then, the city was very successful anyway. So the question is, what does the city look like with no deal? The answer is you can look back to before then. And then in addition to that, since 1995 in particular, the UK's regulatory regime has been increasingly driven by EU constructs and concepts which are very civil law based, which are basically at odds with the UK's traditional way of making laws and regulating, which is a common law based system, and more laissez-faire, but not in a dangerous way that's often portrayed in the EU. But we actually are comfortable with markets for the sake of markets, so long as they operate fairly. Whereas in the civil law regimes, people are more suspicious of markets and seeking to control them. Those rules have increasingly controlled the city. I think have made it less competitive vis-a-vis its real competitor, New York. And I think, particularly over the last 8 or so years, I think if there were to be no deal, we would have to remove an awful lot of red tape and look again at a lot of those rules. And I think there would be an alternative future available to the UK where the city could continue to be very competitive and successful. So, I think a deal is preferable because we sort of know where we are and what we're getting in a way, so long as it's on the right terms. It has to be one which allows us to regulate on the common law basis that we want, as long as we meet high-level international standards. But I think a deal is preferable because it involves less of an adjustment, and clearly people would prefer that if it's on offer.
Now, Barney, going back to Europe, do you see a threat of sovereign debt crises in the eurozone in the foreseeable future?
Well, there's clearly a threat of that. I mean, in a way, what's happening is that those in charge are dancing on the top of a volcano. There are all sorts of ways in which the status quo can be punted along, and they're looking at various fund arrangements. We know with the Frugal Four objecting to that, which would help keep certain companies, companies in the southern eurozone and potentially beyond, that are in trouble in business. There are ways of monetizing the debt issued by the southern eurozone countries, and effectively creating a captive market for that through the ECB buying it. So there are ways of keeping it going, but all of that just basically builds up the debt. It neutralizes potentially in relation to the first solution some of that debt, but without necessarily any democratic buy-in in the north, without it being clear that the German Constitutional Court would regard it as acceptable. It seems to me, we're very close to, and people have predicted this moment for years, and it's turned out not to be that moment. I think we're coming close to the moment where there's an unavoidable clash with reality and decision point for Eurozone states as to whether they're really bought into this or not. Because I think what you're going to see is a very obvious sort of divergence opening up between the standards of living in some of the southern countries and the northern countries. They're not going to, in the south, be able to bail out and keep their businesses going in the way, in fact, going back to the beginning of the conversation, we have in the UK, the Germans have. Those choices and options are not available to many Eurozone countries. And there will be increasingly obvious consequences of that over the months to come. And I think that's going to cause unimaginable strains, because I don't think people will regard that in the south as fair or what they signed up to. What that then leads to politically is difficult to predict, but I don't think it's going to be a satisfied outcome. I think there will have to be change, but I don't think it's going to go to the mutualization that would take all the problems I've mentioned off the table. I think it's going to be messy, and it may ultimately fall apart. Who knows?
And Barney, you spoke about the Frugal Four and the German Constitutional Court ruling. We know that during this crisis, the EU and Eurozone have not covered themselves in glory. We've had the Corona bonds debacle. Borders have slammed shut. Medical exports at times have been banned. We now have talk of a 500 billion Franco-German bailout package, primarily composed of grants. This is obviously what the Frugal Four oppose. A lot of focus on Southern Europe, but I'd like to speak about Eastern Europe. If this goes ahead, what do you think the fallout could be in the Central and Eastern European countries?
It would appear from the reports that they're slightly behind Southern Europe in their thinking about this. They're sort of looking to get more out of the EU before they reach a moment of real frustration with the setup. But I think the trajectory is similar. I mean, and there's been talk in the EU about splitting into a southern and northern eurozone, with the southern eurozone led by France. I think France is not happy with that idea. I think Germany is interested in seeing if it can preserve the Eastern Eurozone and maybe some of the Benelux countries around it. But it seems to me the same problem on this setup, the same problem is down the track in one form or another. It's inescapable, which is that if one wants a currency zone with people, ultimately there will be a moment in time down the track, slightly in the case of Eastern Europe, I don't know how far down the track, quite close down the track in the case of Southern Europe, Southern Eurozone, when there is an essential decision as to whether or not to share and subsidise or make grants to people in the other bit in order to keep them up from, to keep up with the more successful bit. And so if people in the more successful bit are not bought into that choice and are not prepared to make that leap, then there is a break point. And that's what we're witnessing. Now, the question before us, the question we're watching unfold real time, the sort of, is, will the people in the north relent and decide to make those grants and to share to a level that brings everyone up to the same thing and effectively creates a state? And it's not at all clear that they're willing to do that. It's not clear the German Constitutional Court will allow that to happen. And so going to Eastern Europe, it's not the same point will arise at some moment in time. They will want to carry on spending money in a particular way. They will get accustomed to a particular standard of living. They will want to be able to do things that you can do in the rest of the eurozone in the same way, and to share in the spoils. And there will come a point at which people who are that some people will be asked to subsidize or pay for that, and they may say no, or they may say yes. But this is what we're witnessing real time, and I think it's a huge political moment. I don't think the UK would have been happy being caught up in that political moment. I don't.
No, exactly.
Regardless of one's views on the merits or not of Brexit and coming out of the EU legal and regulatory architecture, I think if the UK had been involved in the eurozone, I think it would be a very acute situation for the UK in and of itself, and I don't think the UK would be at all happy with that. But it may be some eurozone states really do want to combine. I mean, clearly some of the smaller ones do, but are the paymasters, are those with the money prepared to fund? And we're seeing the limits of that. And the fund that you're talking about, the sharing of 500 billion or whatever, the numbers involved in the scheme of the problem are not very high. So this is more establishing a principle rather than a particular solution. And I suppose those trying to square the circle are saying, once we establish the principle, we can amp up the numbers. Whether they're able to A, establish a principle, and B, amp up the numbers remains to be seen. I think this is a hugely difficult thing. And coming back to Brexit, it frames everything that we're living through and talking through, because a lot of the rhetoric coming out, I think, is because the eurozone countries haven't themselves decided how they want to deal with that problem, and they're not completely bought into how they deal with the UK. They're worried about the precedent for other people, and yet in a way we don't mind about precedents. All we are saying is, look, let's do the deal that you said we'd do, and let's have a normal trading relationship. But the strain that you can see the strain on the system that the whole situation is causing, not the situation of the UK is making, I would say. I think the situation has been a long time coming and results from the legal architecture of the eurozone, which is a matter of choice of those who set it up.
Barney, before we wrap things up, I'd just like to ask one further question on the matter you're just speaking about. You mentioned the idea of splitting the eurozone almost in two. Is that a remotely viable option?
I think it'd be very difficult. I mean, there's been a prize, I think, offered for people who come up with a way out of for a country to leave the eurozone. I mean, this is brain surgery for someone to leave the eurozone, to split the eurozone. Because you've got to then split apart all these arrangements in a way that's satisfactory to investors and the markets. I think it's very, very difficult. I mean, we're not seeing any public discussion of this. Of course, you wouldn't expect it, because a step of that magnitude would itself cause market shifts of huge consequence. So people would have to want to do it before they announced it and effectively turn up with a pre-baked deal. I wouldn't say it's impossible, but it's extremely difficult.
Barney, we've spoken about coronavirus, we've spoken about the Brexit transition negotiations, the trade deals, and of course the situation in the EU and the Eurozone. Putting all that together, if you had one broad forecast or prediction for the next 6-9 months, could be for the UK, could be for the EU, could be globally, what would that forecast or prediction be?
I think there will be a coalescence of a new trading vision around a more sort of common law way of doing business, where you agree a deal with people and don't seek to interfere with their internal laws in any material way. And the UK will, I think, be a hub for that, at the heart of that discussion. I think it'll be very beneficial to citizens in the UK and businesses here. I hope the EU ends up coming along with that to some degree. They won't fully, because there is a different mindset embedded in the civil law system, and it's almost chicken and egg. Is the civil law a reflection of that mindset or the other way around? I don't entirely know, but there's just a different way of thinking. I would hope they come along with that, with us to some degree. That element is something I can't fully predict. It would be a shame, but it's possible if the EU goes more the Chinese way on trade and the UK drifts off more radically. And obviously, if that were to happen, we'd have to optimize it. But my prediction is that there is that divergence that's going to open up a bit. And we're seeing it real time in the dialogue in the Brexit negotiations. I think it's a much bigger geopolitical point that lurks underneath an awful lot of thinking in public discourse globally. And I think it's the right way for the UK to go. And I would actually predict, ultimately, if I make a brave guess, that the EU will acquiesce in this sort of a vision and come towards the UK and the United States and the Commonwealth on trade. That's what I think they probably will, for all the reasons to do with the problems I'm talking about, but not without an awful lot of kicking and shoving and trying to stop and trying to do the opposite, because it's not their preferred route, and it goes against some of the intrinsic ways of thinking embedded in the civil law and in the terms of their trade theory, which are so different. But I think ultimately they'll swing our way and not cleave towards China. And I think we're seeing little early signs of that. But it's a big pivot point choice. And I think the government needs to stand firm on sovereignty. And if the government stands firm, as it's doing, on UK sovereignty, I think these other things will follow because of these wider geopolitical forces.
Barney, I think that's a good point to end. So, Barnabas Reynolds, thank you very much for joining us today.
Pleasure, Jonathan.
And thank you for watching. You can find out more at www.brexit-watch.org. Please subscribe to our YouTube channel. You can find us also on Facebook and on Twitter. Until next time.